Hi there, welcome to my favorite time of the year, the last week of July, moving into August, because we see how companies are performing. In the last week of July, we're going to see a lot of quarterly reports being released by mining and non-mining companies. Mining companies release activities and Appendix 5Bs, while non-mining companies release Appendix 4Cs. And then as we transition into August, we're going to see a lot of companies on the ASX release their financial year 23 results. In fact, we've already started to see companies release their results. And one of those companies is Corvest. I was actually thinking of doing a video on Corvest because they always release their results a week before the normal period. But instead, I'm going to do a video on Core Lithium because they released their quarterly results and the market didn't like it. Now, when I say the market didn't like it, I'm not referring to the results as per se, but more than likely, the reason why the share price is down 17.2% is because the company gave some financial year 24 and 25 guidance, and that's what the market didn't like. Now, I'm not a big expert on core lithium. I'm not a big expert on lithium as per se. I do know where core lithium have their projects. It's in the Finniss or near the Finniss River in Northern Territory. The main reason I know the Finniss River is because a few years ago, maybe 10 years ago or so, there was a really interesting story about a crocodile taking someone and then two other guys, this person, unfortunate person whose life was taken by a crocodile. They were in a tree overnight, holding on for their lives. So a really interesting story about the Finniss River. Don't go swimming in it. Anyway, that's where they have their operations. So in today's video, I'm going to go through Core Lithium, have a look at their quarter results, and try to figure out why, I already told you, why the share price is down 17.2%. So let's have a look at their quarter report. And as soon as I open up any quarter report, and when I say quarter report, I'm referring to the Appendix 5B. Now, a lot of companies will combine their quarterly activities report and the Appendix 5B in the same document. Core Lithium have done that. A lot of mining companies will separate it. In fact, a lot of non-mining companies will separate it. And Core Lithium have also released a presentation alongside their quarter report. Most companies don't do that. So we have maybe not extra information, but probably the best way to put out is more user-friendly information set out. Anyway, whenever I open up an Appendix 5B or 4C for that matter, I go straight to the cash flow report. And it's found on page 11, I believe. Lots of information there in the activities report. And here we go. Is it page 11? Yeah, page 11. And the first thing I always look at is receipts. Now, Core Lithium is just in production. They have started production either the end of last year, very close to the end of last year or the start of this year. And most of the receipts have been in this current quarter or the previous quarter, the June quarter. So $114 million of receipts, $134 million in the year to date, which means only $20 million of receipts in the previous quarter. Now, the second thing I want to look at is the operating cash flow. So $94.7 million of operating cash flow in this one quarter. So without knowing anything about this company, when I say anything, I'm talking about compared to experts who know this company, compared to the retail investors who absolutely love Core Lithium, I looked at these numbers and went, whoa, this looks really interesting. So $94.7 million of operating cash flow, not a lot of spending when you look at investing and financing activities. So about $64.4 million in capital expenditure and exploration and evaluation, $25.4 million in mine development, another $7.3 million for security bond, that sort of thing. But cash on hand for this company increased a lot. In fact, it increased by about 60 million, or 55 million, we'll say, from 97.8 million to 152.98 million. So a lot of cash on hand. And this is very important. This means Core Lithium is a real business. And when I say real business, I mean they have cash coming through the front door. Well, there's more cash coming in through the front door than is leaving the business. So they're building up their cash reserves. And this is very important because cash is king when it comes to any business. In fact, as a shareholder of a company or an investor of a company, what we want to see is money coming to us in terms of dividends, that sort of thing. And that's down the line, probably for core lithium. So to see increasing cash on hand is a good thing. And another thing this means is when it comes to management, they have to put on their capital allocation hats. And this is, in my opinion, the most important job when it comes to management teams of companies that are profitable and are generating cash in their operations. They have to make some capital allocation decisions, or what are we going to do with this cash on hand? Maybe they've already decided what they're going to do because they do have another mine coming to production, hopefully within the next few years. We'll talk about that in a second. Maybe they're thinking about already dividends. Probably not yet, but eventually they will have to think about it. So those sort of capital allocation decisions are very important. For instance, over the past 20 years, particularly if you go back to 15 years ago, a lot of mining companies made really bad capital allocation decisions by buying stuff. And then shareholders of those companies said, no more. We want to receive that money that you are generating in your business in the way of dividends. That's why companies like BHP, Fortescue, all those sort of mining companies have really massive dividends right now. The other thing I want to check out here is whether the company has any debts. So according to Section 7, they have no debts. And that's really all we need to know when it comes to the Appendix 5B, the actual 5B. And typically when I finish the Appendix 5B, I go up to the activities report, and then I see if there's anything exciting happening. So usually they have a highlight section. You can go through that, but usually these mining companies have a table. And this is table 1 on page 4. Here it is, the operating performance, and also talking about production, sales, and cost of production. I always look cost of production. Now, when it comes to lithium companies, I don't know the C1 cost, what I should be comparing it to. When it comes to gold companies, I really know that. I did have a look at Pilbara Minerals, and their C1 cost was $632 for core lithium, down to $902 for this quarter, $2,188 the previous quarter, which is understandable because much less production in that quarter. They did also gave guidance for financial year 24 in table number 2. So now let's have a look at that guidance. So production up to between 80 and 90,000. So in this particular quarter, it was only 14.7 thousand. So they're really ramping up production. So just think if they keep C1 costs where they are and lithium prices stay where they are, or spodumene, whatever they're selling, and they get to this production level they are aspiring to, this company will be gushing in money through the front door. And again, the cash on hand will increase a lot. But C1 costs are going to rise according to their guidance here. So not by a heaps much, but by a little bit. And they also talk about growth expenditure. So when it comes to capital expenditure, you can separate capital expenditure into 2 parts. You have maintenance expenditure. So what do you have to spend to keep the company progressing along in its normal state? Or growth expenditure. What are we going to spend to grow the company in the future? And in fact, they've actually broken it down here. Site sustaining capital between 20 and 25 million. Not sure what deferred stripping is, but that's between 45 and 50 million. And then growth expenditure, BP 33 early works between 45 and 50 million, and exploration and study expenditure between 35 and 40 million. So they do have some plans on what to do with the money that is coming through the door. The other important thing about this company being operating cash flow, free cash flow positive, is no more capital raisings. That's very important. In fact, maybe part of their capital allocation decisions is to do a share buyback if they think the company is undervalued. So that's all I want to show you. Oh, apart from, they did give financial year 24 production and cost guidance and financial year 25 production outlook. This is very important. And I'll talk more about the financial year 24 production when we look at their presentation. But I did notice, and I think this is why this company got pretty well sold off, the share price got sold off today, is in their financial year 25 production outlook, it does say that definitive guidance for financial year 25 cannot be provided. They expect monthly mining and processing rates to be above financial year 24 levels whilst the company continues mining in the Grants open pit. However, overall production in financial year 25 is expected to be below financial year 24. So I was a little bit surprised when I read that. I had a look at some analysis or valuations from some of those brokering firms, And their expectations was that financial year 25 was going to see a significant ramp up in the production compared to 24. And what they're saying here is production actually is going to be less in financial year 25 than financial year 24. And I think this is possibly did catch up some investors by surprise. And that's a reason, one of the reasons why the share price got sold off today. So, yeah. And the other thing he had mentioned is financial year 25 production outlook currently assumes no ore from BP 20 or 33 in 2025. Core is currently advanced in stages of preparing a revised BP 33 feasibility study, which is due in first quarter of 2025, which seems a long way away. Anyway, so that's the activities report, Appendix 5B. Now let's have a look at the presentation. Australia's newest lithium miner, which is probably true. I can't think of any other Australia lithium miner that has just got into production as recently as Core Lithium. Now, a couple of things here. So again, I don't know much about this company, but what interests me here about Core Lithium is this third point here. Currently operating the grants, not that bit. BP33 is the cornerstone asset for Core Lithium, which is targeting a final investment decision in the first quarter of 2024. So I don't know anything about BP33. Is it going to be bigger than the current mine? Who? No. Well, but probably a lot of experts of this company know, but I don't know much about this company. Don't really care about the highlights section. Operational update. I think I'll go to operational update. Yes. So this is the operational update. And the main thing I'm looking for here is not the table on the right. It's the commentary. Just I want to see what management are saying. And the second point here is interesting. Mining performance remained below expected levels during the quarter, due in part to further inclement weather in April. So again, one of the reasons why the share price might be down, apart from financial year 25 guidance probably lower than they expected, is even production in this particular quarter was lower than expected based off that one comment. And then we go a bit further down. Page 5, that's page 5. No, that is page 5 there. Recovery, page 6. This is one I want to show you. Fitness operational update. There was a part here about recovery. Okay, so the third point down, it says, however, as apparently the recovery rate, so 49% recovery or something like that, was lower than maybe expected, because I actually do mention here, it is not uncommon during the start phase, recoveries have been lower than the original test predicted, averaging 49% for the quarter. So again, recovery is lower than expected, and maybe that means production lower than expected, and that has surprised the market, and that's why the share price has sold off. And probably the last thing I want to show you in regards to presentation, not the performance improvement initiatives, is financial year 24 guidance. Second paragraph here. So with respect to financial year 25, Core expects monthly mining processing rates to be above 24 level. I think I've already talked about this. So the main point about this is financial year 25 looks like it's going to be, in terms of production, lower than financial year 24. And I think that's one of the main reasons why this company's share price has collapsed today, down about 17%. Now, the other very important point is when it comes to shorting of this company, I'll just zoom in a little bit here. Core Lithium is one of the most shorted companies on the ASX right now. So this is from shortman.com. It tells you the most shorted stocks, top 100 shorted stocks. Flight Centre's number 1. Core Lithium is number 2. And IDP Education number 3. Sierra Resources. JB Hi-Fi number 5. It's always highly shorted. I'll tell you a story about JB Hi-Fi. Back in 2013, when it was the most shorted company on the ASX, I took a position JB Hi-Fi at about $7. Share price of JB Hi-Fi now is 42. So shorters can get it wrong, and they get it wrong a lot. Also have Select Harvest here. I've taken a position in that company. Brainchip, Breville. I'm a shareholder of Breville. So don't be scared when you see a company you own as among this particular list, because shorters can get it wrong. And if they get it wrong, you can see a short squeeze. A short squeeze is they get it wrong, some good news comes out, share price goes up, and they have to get rid of their shorts, and you can see the massive rise in the share price in a fairly quick period of time. Now onto the chart for core lithium. Let's have a look at the weekly chart. Different time frames. Oh, beautiful weekly chart. Well, not now, but the breakout of this company happened in November 2020. Let's have a look at that breakout. Just zoom out a little bit. Here's the breakout right there. So 23rd of November 2020, high volume, share price rose 28.6% in that week. And then over the coming, or the next, or the following 1, 2, 3, 4, 5, 6, 7, 10 weeks, the share price went from about 5 cents to a high of 42.5 cents. And that was the breakout for this company's share price. Share price just kept on climbing from there. But share price did get a high of $1.88. And that was back, my mouse can find it, November 2022. So not that long ago, but the share price, just by looking at this weekly chart, is now in a downtrend. And unfortunately for core lithium, the share price has moved below a fairly, well, it's right on a really strong support level. So technical analysis can work. So the lows back in March of this year were 72.5 cents. The current share price of core lithium is 73 cents. We did see a little bit of a bounce off 72.5 cents. So 72.5 cents is a really important level for core lithium because that was the most recent, well, the last time it was this low, the most recent low anyway. So that is a natural support level. So if the share price falls below 72.5 cents, and I wouldn't be surprised to see it fall a fair bit more because a lot of volume coming in today, that will be a fairly bearish move. Share price in a downtrend. So there's no arguing that. If you look at the daily chart, if you look at the 1 hourly chart, just want to see what happened today. So a lot of selling today. Most of the selling was in that first hour. The share price kept on dropping, but a little bit of support in the last 2 hours as the share price moved to that support level and like a spinning top right on the last hour. So really interesting to see what happens in trading tomorrow. Now, I will trade core lithium. I will not own core lithium for the long term. This is just a trading stock. And in terms of trading, I could imagine or think of taking a position at 73 cents, hoping for a bounce tomorrow. So on open, if I see it at 73 cents, I might take a very short-term position and just hope for that little bit of bounce based off the share price right at a very strong support level. And if the share price falls below 72.5 cents on strength, that's an easy sell. Cut your losses and run. And it's sort of a low-risk trade. That's the way I look at it. Low-risk trade. There's a possibility of a nice bounce, and if it doesn't bounce, then you just sell out without much of a loss. Anyway, so that's really all I have for core lithium. If you have any questions about this company, if you know a lot more, and maybe I'm completely wrong, why the share price fell, was it 17% today? On what day is it? July the 24th. If you have further ideas on this company, if you think it's really cheap, I'm not even sure what the market cap of this company is, probably about 1.5 billion. Let's have a look at ComSec. 1.6 billion before today's drop. So if we take 17% off that, we're talking about 240. Yeah, we're talking about 1.4 billion, just a bit above 1.4 billion. Now, as I mentioned before, I don't know anything about the long-term potential of this company. They're in production. That's a first good step. And it's just that financial year 24 and particularly that financial year 25 decrease in production, I think has the market a little bit spooked today. So that's all I have for today's video. And the last thing I probably should mention is I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.